Shout out to creators for diversifying their income streams. Relying on social media only or relying on, I know creators that rely on one platform or service. You know, it all kind of can work together in the same way that you diversify in the stock market. You want to diversify your income in other ways.
Jordan, what is happening, my man? How you feeling today?
I'm good, man. I'm glad to be back in the city. It's starting to warm up. I was just in San Francisco last week and then Denver after that. So glad to be back here and enjoying the sun, man. It's just this winter was so long in the city. So it's 48 degrees 2 days ago.
Yeah.
Now it's like 60 degrees today. What about you, man? Coachella looked like it was popping. Looked like you had a lot of fun there.
Had the opportunity to shoot with a couple different clients, created some great content, had some time to catch up with some people, catch some cool performances. So it was also nice just to have some time to be able to kick it with some of my partners at Knox. So yeah,
Hiked a little bit too, right?
Thursday, we got in Wednesday night. Thursday morning, we did a little bit of a hike around Joshua Tree, which is kind of a nice little reset, calm before the storm and the madness. And then Friday on was just nonstop. Honestly, still catching up a little bit on sleep as we record this on Friday the 18th.
Yeah. No, I totally get it. I'm trying to go to Coachella next year because we did Couchella this year.
Nice.
Just watched Coachella on the couch, a lot of it. So
sick. Well,
excited
to be back for another episode. Really appreciate everybody's support. If you haven't already, any likes, comments, reviews, subscribes mean a lot, especially on the comments and reviews side. Definitely love to be able to get any perspective on what's been the most helpful from your perspective, what you'd like us to talk more about. So really do appreciate it if you take a second to do that. It means the world. But without any further ado, do want to dive into today's episode. We got some fun stories and news bits we're excited to walk through and share some commentary around. So without any further ado, Jordan, why don't you kick us off?
Let's do it. So as a high level overview of what we'll go over today, Epic Gardening acquired Modern Farmer. We'll explain the context behind that. We'll do a review of the creator economy funding surge in Q1 2025 and break some numbers down there. And obviously the word that's on everybody's lips right now, tariffs. We will see how that's impacting the creator economy, as well as talk about creators embracing entrepreneurship. So for the first one, in February 2025, Epic Gardening, founded by Kevin Espiritu, acquired Modern Farmer, a digital publication known for its storytelling in food and agriculture since 2013. This move follows Epic Gardening's $17.5 million Series A funding from the Churning Group in 2022 and previous acquisitions like All About Gardening and seed supplier Botanical Interests. Epic Gardening has grown into a leading gardening brand with 8.8 million followers across social platforms and over 10 million podcast listeners. That's absolutely ridiculous. How might Epic Gardening's acquisition of Modern Farmer influence its content strategy and audience reach in the agriculture media space?
Yeah, for sure.
Samuel?
The first thing that comes to mind before we even just talk about the implications of this acquisition, I think it's really worth highlighting a lot of the success and kind of unprecedented traction evolution that Epic Gardening went through. What started as literally a YouTube channel by Kevin focused on gardening, given his passion in the space, has literally turned into a full-fledged media branded network, right? Literally talking about $17.5 million as a Series A. Like that, at that stage, taking on that funding from a capital management funds like the Sherman Group, that means there's player in this kind of new media landscape at that point. And I think this to me is an example of what happens if you build upon momentum and initial traction across different social channels and match that with operational rigor and really understanding the bigger picture opportunity around building a media and lifestyle brand beyond just like getting tons of views and distribution across their content. They've also kind of taken off reliance from advertising by way of launching their own different product lines, different seeds, different gardening tools. So I think similarly, it's not just a media brand that's monetizing off advertisers, but they've been able to incubate their own products. And I think that's put them in this position that they're currently in. And that position really means as they continue to grow, how can they grow through acquisition? How can they acquire different media brands that might might bring broader competencies? I think in this specific instance, Modern Farmer, they had a print publication. It was sunset, but generally speaking, they've been strong from an editorial and written perspective, where a lot of Epic Gardening's kind of roots, pun intended, were grounded in YouTube and video and new media content. So I think expanding capabilities there. I think members of the team at Modern Farmer are really coming over in leadership capacities across the editorial division within Epic Gardening. So I think that's interesting. And yeah, I think it's really fun when you're at that stage as a media company where you can really start growing through acquisition, whether it's through acquiring different audiences that other brands already have, or it's acquiring the different personnel to take on leadership functions and help grow the pie when it comes to the different kind of mediums of media. So that's really exciting from my perspective. What kind of stands out from yours?
I mean, it's just a masterclass in growing a social media brand into like a fully fledged business. What do you think is the main reason why companies invest so early? I mean, $17.5 million in Series A funding. What do you think is the biggest output from these companies that are investing at
Yeah,
such
I mean,
early
I'm
stages?
not 100% sure exactly what date it was started, if you even want to look that up. So I don't know how early, or no, yeah, it seems, I'm not sure, yeah, exactly when Epic Gardening was founded, but undoubtedly at Series A stage, they definitely had some significant time in market along with some significant traction. I think the fact that they were this kind of new media brand that built massive distribution across the platforms where a lot of attention lies, as well as diversified revenue streams by way of incubating and having kind of selling their own products versus solely relying off advertising revenue, probably nice. Yeah,
2013
made this
also.
very, I'm sure it made it very exciting from a investment perspective. And I think holistically, like in my perspective, the real opportunity with media isn't just building media to monetize through ads, but it's building attention such that you could monetize through incubating different products, be it software, be it physical. And I feel like the Sherman Group probably saw that loud and clear and saw this as kind of a precedent for the direction media is headed, which is why they made that significant investment into Epic Gardening.
How much should digital agencies work backwards from this type of acquisition? Obviously, you own a digital agency. How much of it is making sure the next record blows up versus building a brand, something that can actually be acquired in the future? Because there's sort of like two parallel ways to think about social media and content creation in general. One is like promoting something, marketing something, and then another is sort of like turning it into a business, like we're seeing with Epic Gardening. How much of the strategy revolves around each of those things, and at what stage do you end up escalating to? Okay, let's try to sell this record to. Let's try to turn this into a property that we can actually get IP
Yeah,
in.
I mean, I think doing stuff like that where you actually start incubating IP isn't what an agency does, although it does make sense as a kind of
Right.
sequential opportunity with an agency. Has definitely been something that's been a big focus for Knox recently. It's kind of not just relying solely on work for hire, where we're literally transferring any level of ownership over to clients based on what we do while working on their projects. I think
Right.
Epic Gardening seemingly kind of started as a media brand rather than a media agency out the gate. And I think there was probably a long ramp up period, which I think is, there's pros and cons to both approaches. If you're launching an agency where you're just doing work for hire for clients, like you can kind of get revenue and profit in the door day one with your first client. When you're building a bit of a
Mm-hmm.
ramp up period where you're probably going to be burning some cash before you get to a point where you're actually able to turn any level of meaningful revenue. I think, with that said, the much bigger long-term opportunity, both across profit margin, earnings multiples. Um, so I think, yeah, I mean, it really depends what you're optimizing for, what your goal is. But I personally, in my experience, it's kind of in the same way you see modern media companies start by building distribution and monetizing through advertising, and then take it a step further to actually start uh, identifying and selling owned products instead of just selling advertising. That's kind of like the sequence from my perspective as an agency owner. It's similar, except it's kind of starts a step earlier, which is like build team infrastructure,
Right.
service clients, then start to incubate different media IP. Once we have owned distribution, then we take it even a step further and start doing that with a like owned products outside of just media.
Nice.
Yeah. Well, let's
Nice. Dope.
the next thing we want to speak about, the information published an interesting report that broke down some of the Q1 creator economy funding figures. US based creator economy startups raised 928 million in Q1 2025, marking a nearly 140% increase from the same quarter last year and the highest total since 2021. Um, this is, I mean, I think there's been tons of volatility within the broader markets. To see that we're hitting damn near record levels. I remember that kind of upswing of what became kind of peak fundraising mayhem. Um, so now that we're kind of back there, especially as certain sectors are pulling back, to see this growth in the creator economy is really exciting from my perspective. What do you think this surge in funding indicates when it comes to investor confidence in the creator economy's future?
I think there's sort of a couple of things that are sort of coalescing at the same time. Like the creator economy, we've said this before, is expected to nearly double by 2027. But also the rise of AI, I think, is helping the creator economy and businesses in the creator economy. So 46% of new unicorns are AI based. And AI tools right now, you can argue that it's disrupting content creation the most. I mean, with us, we just had a meeting right before this about how we can use AI tools to better create content more quickly for us, since we have full-time jobs and are doing things outside of this as well. So I think it's sort of ripe for change. And I think it's not just the creator economy that's growing, it's all these tools that are supporting the creator economy. So when you see all these rounds of investment, it's sort of like two things at once. It's like we're investing in things that can help the creator economy that was already taking off before AI. People were just doing it and had teams, we had teams, and now AI is sort of expediting all of this and making it much easier to create content, which means there's going to be even more money going into that space already. So it's sort of like growth on top of growth is sort of how I see it. As well as like the way that people are selling now, they're selling. I think eventually the majority of retail sales will be through creator influencers and through people that are trusted on social media more so than the advertisements that we see on the Super Bowl. Like, unless those advertisements have influencers on them, I really do think like the trusted voices will be able to bring products to market in a much more efficient way. And I think that's reflected in people investing more in the creator economy in
Yeah, no,
Q1.
I think it's
What
interesting.
do
I'm
you think?
actually going to share a interesting report real quick, but this is like look at it's kind of the opposite of what's happening in traditional media. Like Walt Disney company
That's
prices
wild.
like at similar levels, lower than it was 10 years ago, right? Like 90, and today we're
Right.
at $84. So I think what's interesting is that this is a sign that despite the fact that there's lots of like fears around recessions looming, um, there's certain sectors that are undeniably rewriting rules of how modern business is being done, that despite general unrest and generally a challenging fundraising market, are still the kind of diamonds in the rough. We're seeing that across both AI and seemingly creator economy, as evidenced by some of these statistics. So I think it's just really interesting. I think there's a lot of businesses that some of the biggest businesses in the world were built during quote unquote like recessionary periods or kind of downtime. I think it's
Right.
to me what's most fascinating and reassuring is that it's just like capital allocators see the see the macro trend that's taking place, which is that like the rules of attention distribution are being rewritten, large in part due to attention shifting away from institutions and big media brands and towards individuals. So the platforms and companies, individuals,
Right.
are what are really starting to accrue and create value, and investors want to participate in that. So I think it's super excited to see it continue to take shape and mature.
Yeah, and the only other thing that could kind of hold creators up there are changes in algorithms, but creators always learn. Like they always learn how a new algorithm works and figure it out. So I've heard that as something that people are worried about. What if Facebook changes their algorithm? What if YouTube changes their algorithm? Creators always learn. Speaking of recession, dun dun dun. Let's talk about how tariffs are impacting the creator economy. So, President Trump's 2025 tariffs are shaking it up with a minimum 10% levy on imports and up to 145% in some cases. For people that don't know, that means if I bring something into the US for $10, I'm paying $14.50 in tariffs, putting major markets on creator-led businesses that rely on international manufacturing. Starting May 2nd, the U.S. will also eliminate the de minimis exemption on packages under $800 from China, meaning platforms like TikTok Shop, Temu, and Shein will face tariffs up to 120%, plus a postal charge that jumps from $100 to $200 by June 1st. There's already been a few creators that have been feeling the heat. QT Cinderella says her accessory brand Deco Deco is seeing supplier payouts and supplier pullouts and 3 to 4% price hikes. Mr. Beast, who we've talked about on the show a lot, shares it's now way cheaper to manufacture his feasible brand outside the US, calling the change a serious blow to small businesses. How do you think tariffs will affect the creator economy? And do you think it's here to stay? Do you think he's just blowing
Yeah,
smoke?
I think um unclear as to if this is here to stay, and
Yeah, nobody knows.
if
Good,
it'll
good
really just
answer.
be around, yeah, kind of current impact on creator economy side. Um, I do think it is interesting how Mr. Beast has highlighted how it's now way cheaper to manufacture his feasible brand outside the US as there's less reciprocal.
Exact
I do
opposite
think
problem.
it's interesting from brands and creators that have global diversification in product lines. So I think that's an interesting kind of like um, pro in what is otherwise a situation filled with lots of cons. I mean, it's definitely tough. I mean, when your kind of cogs and supply chain undergo any sort of like massive price hike, yeah, it's going to have ripple effects. I mean, I've spoken with people that have significant interests within bigger fashion companies and whatnot, and even just supply chain there is having significant impacts. I mean, I do think when it comes to different software products, you're a little more. Uh, you're a little less vulnerable to things like this by way of not necessarily need to be as reliant on like physical supply chain, which you might have some of these different risks or jumps. I think those that are relying on that, unfortunately, are having to go through a tough time and kind of reproject, kind of iterate a bit potentially on some of their different like production plans and supply chains. So I think it's yeah, it's definitely going to be challenging for some, but I think it's something people need to adapt on.
Yeah, I mean, who knows if it's actually here to stay, like you were saying in the beginning. I mean, obviously, I went out and panic bought a new computer this weekend. I'm sure a lot of people are doing the same thing. The Apple store was super busy on Monday. They were like, it's never this busy. And I was in Denver. I wasn't even in New York. So clearly it's something that's affecting people pretty aggressively. But to say that it's cheaper to manufacture Feastables outside the US is sort of the exact opposite of what the president wants, which is pretty insane. Obviously, when you think about creators and the creator economy, I would say it's like one of the more fickle things. So like to get sustainability with and to get consistency with in terms of revenue. So it's pretty unfortunate that it's affecting creators in this way, but it is what it is. It is what it's gonna be. You know what I mean? So what can you
Exactly.
do?
Awesome. Well, as we come to a close here, one last thing we kind of want to talk briefly about is Kajabi released a 2025 State of Creator Commerce report. And in that report, they mentioned that 59% of creators now identify as entrepreneurs, which is a 16% increase from their previous year's report. I believe the shift is driven by declines in traditional creator income sources. Platform payouts are down 33%, affiliate marketing revenue has dropped 36%, and brand deals have declined by 52%. Creators are increasingly focused on building their own businesses through digital products, memberships, and communities. What are your kind of takeaways from this, and what strategies can creators employ to successfully transition into entrepreneurial roles and diversify their income streams?
Well, first of all, shout out to creators for diversifying their income streams. Relying on social media only and or relying on I know creators that rely on one platform or service. It all kind of can work together in the same way that you diversify in the stock market, you want to diversify your income in other ways. I think in order to it sounds cliche, but in order to prepare yourself to actually expand into other things other than just social media content, I think you have to be really organic and like find a niche. Like we talked about Emma Chamberlain in the last episode, and I think she's a really good example of that. Like find something that's unique about you or that people know you for, and then figure out ways to commoditize it. That's sort of the only way to get out of the hole of just creating content to make money the entire time and getting into
Yeah.
advertisements on your content consistently. Like you have to figure out what part of your personality, what part of your brand, what part of your content can expand past the brand and can become a business. We talk about that on this show all the time, and I'm more bullish on that now than ever. I'm hoping one day 100% of creators who create on the or social media influencers see themselves as entrepreneurs because they are. The strategy that goes behind all of this, even with AI, right? Like AI is making it easier to create content, but there's a strategy behind everything, and I think a strategy for creators should always be, how do I expand this past the social media platforms that I'm on and turn this into like real
Yeah,
IP and real revenue.
1000%. Well, there it is. Another week, another episode. Really appreciate all you for tuning in. Let us know in the comments what you want us to talk about next. It's always a pleasure getting to shop it up with you as well, Jordan. So thank you, everybody. Be back next
Absolutely.
week. Talk soon.